Our guest sees value in Canadian oil stocks and says this is a perfect buying opportunity. Let's get more from Thom, Portfolio Manager and Chief Executive Officer at Moat Financial. Thanks very much for coming on.
Yeah, thanks for having me.
Yeah, I did kind of notice that oil bounced this week, but there wasn't much joy in the energy stocks. Why do you think people were wary?
Yeah, I mean, I think you just mentioned a minute ago that, OPEC's talking about potentially increasing production as the year goes on. But then, as you said, they're backing away from that a little bit. I mean, I think that honestly, a lot of it is just these oil stocks, they make money. They're great businesses, but I guess they're just not exciting enough for a lot of market participants to be pushing them higher.
Right. And they have had a pretty decent run. What about you? Would you load up on oil right now?
Yeah, I mean, I think, energy is something that we use every day. It's not going anywhere. And we've got a lot of really great quality Canadian businesses that to choose from. So, if I take a look, I've been on here before talking about Suncor. It's now backed off from, around 54 down to $50. Mm-hmm. It's trading at 8 times earnings. So, I mean, that's a point that I think people can get in. They're going to get a great dividend. One thing that we're doing is entering into these stocks who have seen a bit of a pullback. They're seeing option prices elevated. Selling some cash covered puts is a great way to get into these stocks and things that you can hold for the really long term.
So you've been selling options that give people the right to sell you the stock, and I presume at a strike price that you're happy owning it.
Yeah, absolutely. You step one is find a company that you want to own, and you can go ahead and buy the stock right then and there, or set the money aside, pick a price that you want to enter it, sell a put at that level, and if the stock goes below, then you're going to be buying that stock and putting it into your portfolio, and if it stays above, then you just make some money from selling those puts.
Give us your view on the Canadian banks. TD today hit its lowest price since 2021. The dividend yield now about 5.5%. Are you tempted there, Chris, by that stock?
Yeah, I'd say, the Canadian banking system, we've got the big five, and then obviously you've got National is growing with its acquisition of CWB there. But, it's not a hugely competitive business. We've got this oligopoly where these companies are able to make money. A lot of their riskiest loans are insured by CMHC. So, it's just a really great business. So obviously people out there, their mortgage payments are going up. They've got a bit less discretionary income. Maybe there's less consumer loans. People are doing less kitchen renos, buying less boats, some of this consumer debt that might carry a higher interest rate. But at the end of the day, I believe in the Canadian banking system. And if we can be buying into a lot of these high quality banks that have delivered great returns over the last 20, 30, 40 years at 10 to 12 times earnings, this isn't something that, you're necessarily going to get your timing right and make a bunch of money right out of the gate. But I think over the next 5 to 10 years, this is going to be a great entry point for a lot of these businesses that have pulled back, even TD.
National Bank buying Canadian Western. Apparently there are misgivings among some investors as to the long time before they get a payoff in terms of extra profits. There's going to be integration, etc. Are you interested in National Bank?
At this stage, it's not something that we are putting into portfolios widely. I mean, time will tell if that premium that they paid on CWB is something that makes sense. It's, this is one of their only ways to try to catch up to the other big five banks. So, this is their way to get a lot bigger footprint in Western Canada. And we haven't formed a full opinion on it, but I think you're right that only time's going to tell on that one.
What about tech? What about the big U.S. techs? I know we almost talk about them too much, I know, but are you in NVIDIA, for example?
So, NVIDIA is not something that we own here. It's, I think that we may have a little bit of history repeating itself on these, not as of today, but fast forward at some point. We've got just such a huge percentage of the market is made up of so few stocks. And in the last little while, everybody talks about AI. They say we're going to do this and that with AI, and all of a sudden their market caps go up. I think Apple this week, their market cap with the launch of Apple Intelligence, their market cap went up $600 billion at the high. I mean, that's a lot of earnings that they're going to have to backfill that over the next few years to have that make sense. So in our view, these are great businesses. We use their products every day, and they're just getting more and more widely used. But I think people should use a bit of caution when buying these, because those PEs are getting pretty high, and it might, so a lot of the gains may already be in these stocks.
What do you tend to do during the summer? Do you tend to lighten up your equity exposure and go to cash to a larger extent, because markets traditionally tend to go sideways during the summer months?
We don't do too much in the way of seasonality here, of saying, okay, sell in May, go away type thing. We do integrate within a lot of our portfolios here some option strategies. So throughout the summer, we'll continue to be selling covered calls on stocks, or, at this point, mentioning some of these higher flying tech names, we are implementing some hedging or some negative bias trades within portfolios. And so I wouldn't say we're doing that just because the summer's coming, but that's definitely something that we are integrating within some portfolios where it makes sense.